Hello, everyone. Happy Friday to you guys. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, it's the last trading day of the week, and I'm so excited to be with you today as we are going to be rounding off on our trading activities after a tremendously profitable week. But before we kickstart the session, let's run through our daily routine by confirming that we are good to go this morning. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So this will give me a positive feedback, and on that note, we will be moving on to begin. So I look forward to your comments, please, your feedbacks, and thank you very much as you do so while I load my comment box. Okay, so I can see a handful of comments here, and I see your comment here. Fodi, good morning to you. G1717, Wazingwa, good morning to you. Alina83, good morning. Okay, who else is here again? I can see SBRKVM. Pew, good morning to you too. Follows F, good morning to you. Thank you very much for that feedback. I can also see 906466697. Thank you very much for the feedback. FCH, thank you very much. And I think that is all I have here at the moment. So I will take this as a positive feedback that we are good to go this morning. And it's on this note, I welcome you all once again to yet another promising edition of the Extreme Speed Live. And my own name is Sheriff Daramola. And for the next 1 hour, I'm going to be your host as we will be taking another fresh new perspective into the current financial landscape from a technical standpoint, using simple and fundamental tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action ahead of the New York session. Well, so far this week, we've done very well as we have been monitoring four major assets since the beginning of the week, which includes the US All Spot, the USTech100, the GBPUSD, and finally the XAUUSD, which is popularly known as the gold sports. And then we've done very well on them all, and in fact we are going to be looking at how we are going to be positioning ourselves for today. And remember that today is the last trading day for the week, and you all know, for those of you who have been with me for a while now, you know how important today is, as it always has this psychological peculiarity, as majority who took advantage of the prior leading price action direction will want to be taking some profit off their positions, rounding off ahead of the weekend, and this usually reflects on the chart as a form of reversal. So we are going to be taking this into consideration too while we review the current market conditions. For those of you who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us this morning. I know you will be asking what this is all about. Well, to simply put, as technical traders, we gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation for the New York sessions. The session kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during this time so you don't miss out on the insights that we will be sharing throughout the course of the session. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and, of course, utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, you are very much welcome, and I encourage you to actively engage in the comment section. So, with that being said, here we will be moving right into the next thing on our purview, and the next thing we usually do is to run through the economic calendar, and of course, we know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So, on the economic calendar for this week, we have been monitoring the events from both the United States and the United Kingdom based on the assets we have on our watch list for this week. So, for today, Friday, November 17th, we have a scanty outlook here, as the only event we're looking for today is from the United Kingdom, and that is the retail sales data. And in fact, this event had already been published about 3 to 4 hours ago, and in fact, data came in here below expectations at a deficit of 0.3%, way below the previous expectation of 0.3%, but it's still way above the previous data for the month of September. So today we are going to be looking at how the pound sterling had reacted to this event and how we want to be capitalizing on the next move. So with that being said, here we will be relying on our technical skills to identify new setups in the absence of no economic event again. So with that being said, we will be moving right into the first asset on our watch list, which is the US All Spot. Now, on the US All Spot, we've done very well. In fact, the last 24 hours gave us a very strong bearish momentum, as you will see here. And in fact, we are going to be looking at what led to the decisions we made. Now, hold on a second. So, as it is right now, we have oil prices plummeted to over 4 months low, and has since been trading in a narrow range that is between that 73.35 and the 72.35 area, especially during the Asian session. And I will say that these declines are fueled by ongoing concerns about a slowdown in the Chinese economy, which of course we all know is the world's top oil importer, and reduced fears of supply disruption in the Middle East, as well as also added to the nosedive of the US oil price. So from a technical standpoint, we are going to be taking a dissection of this chart, and before we go into that, I would like us to run through how the week started for us in this community for the sake of clarity, and for those who actually missed out on our earlier sessions can be on the same page with us. Now, at the beginning of this week, we saw here how price was initially confined within a range that is between the $76.75 level and the $76.35 area, to give us an insight into the indecision that was going on in the market at the beginning of the week. Now, coupled with the range we identified there was this robust ascending trend line, which of course was captured from last week Wednesday's trading session. And for the fact that price action remains above that ascending trend line, we were looking out for buying opportunities at the breakout of the resistance line of that range to capitalize on our first buy position for the week. And I mentioned here that for those of us who missed out on that one, then a breakout of the $77.50 area will welcome more buy positions. We also added one more, had the $78.43 and the $78.63 area as we maximize the potential of that bullish move. And for those of us who took advantage of that trade, it was a very, we had about, I think we had a close to 800 pips, I think, close to 800 pips on those multiple entries. And for those of us who took advantage of that move, well done and kudos to you for capitalizing on that one. Then fast forward to Wednesday's trading session, we were able to spot a beautiful reversal setup despite that bullish momentum that started this week. So we saw here that after this impulsive move, we saw our price transitioned into the head, the left shoulder, the head, and of course the right shoulder right here. And we had our neckline situated exactly at the $78 area. Now, so we saw what happened here. Price action. We were waiting for price action to break down the neckline. And in fact, it did not only break down the neckline, but came back to retest it to inside the bearish momentum. And since then, we have been selling this asset, as you will see here, riding that momentum all the way to the downside. Now, if you remember vividly during our live session yesterday, we also identified another structure which we said we will be using to guide our decisions, where we saw price confined within the $76.50 level and the $76 area, as you will see here. Now, I told us all that for those of us who are profitable for this week, that we can look at placing a buy stop order above the $76.50 area to capitalize on that bullish move, which actually happened as we saw price action move about 35 pips before we were taken out of that buy position in a loss as sellers took over the market. And of course, you know that we did add a sell stop order below the $76 area, and in that regard, we were able to recoup the loss we incurred on that buy position. And as you will see here, we saw how price did move significantly to the downside with a whooping over 200 and I think over 350 pips price moved here, as you will see. And for those of us who capitalize on this move, well done and kudos to you for being on standby to take advantage of that move. And of course, by now you must be out of your trade if you had moved your stop losses accordingly. But if you are not, I will be encouraging you right now to either close or place a stop loss right now to ensure that you get yourself protected against any sudden pullback that might happen around this area. Now, with a well-secured position at this juncture, what is going to be our plans for today? Are we planning to continue the downtrend scenario, or are we going to be getting ready to buy? Personally, I already have a buy position triggered, but I will be sharing with you in a moment what led to that decision. And for us to have a better perspective into this, I would like us to run through the 4 hours time frame. Now, right here on the 4 hours time frame, for those of you who have been with me since the beginning of this week, you will be familiar with the structure. But as you will see on the 4 hours time frame, we noticed a couple of parameters here which we in fact use to guide our decisions for this week. One of them is the descending trend line here after we connected a series of lower highs. In fact, in the last 3 to 4 weeks now, price action had consistently found lower lows and lower highs, and in fact you saw how price broke down that our key level had the $80 mark. Now at the beginning of this week, after the breakdown of the $80 area, we saw our price retrace close to the $80 area to incite a downtrend move. Now if we use our Fibonacci extension tool to measure the TP target of this breakdown of the $80 area, you will see that the 127.2% and 1414 extension falls exactly around this area, where you will see that as soon as price got into the zone, we begin to notice the appearance of buy pressure resume one more time. And if we consider today to be the last trading day of the week, we are likely going to be seeing a reversal setup, maybe in the form of a retracement of the impulsive move, maybe into the 75, 76 area, or even to as far as the trend line to incite a downtrend move. And in fact, if price goes on to break out of the structure, then we might be seeing another wave of bullish momentum. Now, with the situation we have here and the knowledge we have gathered on the 4 hours time frame, let's scale down into the 1 hour time frame to see how market participants had reacted to this current market structure after testing that TP target zone. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. And one of the things you will notice here is that as soon as price tested that lowest point here at the $72.35 area, we noticed price transition into a consolidation phase where price was confined within the $73.35 level and the $72.35 area, giving us an insight into the level of indecision in the market at that point in time. And of course, you know how we use our flag channels in this community, especially when we have an indecisive phase like this. We have no other choice than to exercise patience and wait for either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And with the way things are going, with my sell stop order below the $72.35 and the buy stop order above the $73.35 area, we finally saw price break out of the 73 resistance line a couple of hours ago to incite a potential reversal setup. Now, with the way things are going now, I'm of the opinion that we might be seeing a retracement of that impulsive move we witnessed since Tuesday's trading session. Now, for those of us who had missed out on this opportunity, well, I will be advising you to exercise patience as you want to see if the market will do some retest of structure. And if that will happen, then we can feel comfortable joining or adding more positions to our existing trade. Now, to give a visual representation of what I mean here, so price has broken out of the structure, and from a technical standpoint, we usually expect that price at some point may come back, retest the structure in anticipation of the next leg of the bullish momentum. And if that is going to be the case, then we are looking out for opportunities to join at that point in time. So for those of you who missed out, please be patient and let's see if the market will give us a second chance. However, it's not all the time that price action does this. Sometimes it will just continue to find higher highs and higher lows. And if that is going to be the case, how do we intend to capitalize on the next move? Well, personally, I do have a $74 area duly marked out here, a level which has been consistent with some trading activities in the past. If you look at what happened here during the New York session yesterday, we saw breakdown retest of that area. We saw a shooting star candle around that area, giving us clues of how sellers are strong around that point. And right now, price action is gradually approaching that level. That is the $74 area. So you do want to be marking out that level on your chart, as we are going to be using it to guide our decisions for today. Now, if price action continues and then it breaks out of the $74 area, we want to be adding more buy positions to our existing trade, ride the momentum all the way to the upside. Now, there is a caveat to the setup as we continue to ride this counter trend opportunity, and that is the descending trend line we spotted on Tuesday's trading session. As you will see, since Tuesday, price action had consistently found lower highs, giving us a beautiful descending trend line to guide our trading decisions going forward. And of course, you know that whenever we have a descending trend line, when price remains below the trend line, we look out for structures and patterns that support the idea of selling. However, in this case scenario, we are looking at a counter trend opportunity. So we want to be very, very mindful of this position, as if price continues to climb up, breaking out of the $74 area, as soon as it gets into this trend line, we want to exercise patience and wait to see how the market is going to be reacting to the structure, which is exactly around the $75 area. So if I want to make things a little bit much easier for us, I will just mark this level. So we have hold on a second, let's mark it out. So we have the $75 area. So if price will break out of that $75 level, then price action will have also broken out of that as descending trend line to give us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. Retest of structure will give us further confirmation to be part of that uptrend move. However, if price gets into that area and we begin to notice the reemergence of selling pressure, then we might likely be seeing another wave of bearish momentum to the downside. So let's keep this in mind. Mark out these levels on your chart as we will be needing them as a reference point to guide your independent trading decisions. Now, if price does not go that far into the trend line but instead begins to find lower lows and lower highs from this current structure, I would rather want to see price take out the lowest point for this week at the $72.35 area to feel comfortable joining a bearish move. Now, a breakdown of the $72.35 level will have taken out all the buy positions around that area and negate any attempt by the buyers to continue a reversal setup. So if that is going to be the case, we want to be setting around that area. Now, there's one more thing I would like to state here. If we look at the distance where price action is, and at this moment we can see that we have over 130 pips to catch here. So personally, I'm thinking that is there a way that we can actually sell even before the breakdown of that support line happens. Now, if we bring out our line chart, you will see that we have an ascending trend line after connecting the series of higher lows here, which I will consider to be a temporary trend line. And if we bring back our line chart so that we can make it connect the series of higher lows here. So I would like to give this a green color instead. Okay. So right now we have an ascending trend line. Now, if this trend line gets broken to the downside, then this may likely negate any temporary retracement phase here, and continued selling pressure will actually give us some opportunity to sell even before the breakdown of the $72.35 level happens. So you do want to be marking out these levels and trend lines on your charts, as you will be needing them as a reference point to guide your independent trading decisions. So if you have any questions at this juncture, feel free to let me know in the comment section, or you need some further clarifications, please let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. So as always, hello, JFan28. Good morning. Thank you for checking in. Okay, from Angola. Wow. Good morning to you, and glad to have you around with us this morning. I can also see your comment here, Marketer. Good morning to you. Thank you for checking in. And who else do we have here? Okay, I see your comment, Dino. All right. So in the absence of no further questions, I do want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, and in fact we had a tremendously bullish opportunity at the beginning of the week as we rode that momentum all the way into the 15,930, which happens to be the highest zone that price action has been for this year before that bearish momentum came in, taking us out of that positions. And let's look at this closely together. Let's see how this had happened for us at the beginning of the week. Now, let's look at what happened here. So, at the beginning of the week, following an ascending trend line we marked out here, we saw how price was confined within the 15,530 and the 15,445 area for the first 36 hours of the week to emphasize the indecision that gripped this market. And of course, you know how we use our flat channel whenever we spot them on the chart. We do exercise patience and wait for either the breakdown or the breakout to give us an opportunity to trade. And coupled with the fact that within the range, we saw how price action was actually finding higher lows and giving us an insight into the possibility of a breakout of the resistance line. Now, with a buy stop order situated above the 15,530, we had our first buy position for the week triggered. And look at what we had here. We saw this phenomenal move as price action moved into the 15,930 area with a whopping 400 pips move. So it was a very tremendously profitable first half of the week for us before this bearish momentum began. And right here on Wednesday's trading session, we identified this ascending trend line, which we said if it so happens that the bearish momentum around the 15,930 persists, then a breakdown of that ascending trend line will welcome selling opportunities. And look at what happened. We saw price breakdown, retest of structure gave us about how many pips move was that? We saw about 90 pips move. We moved our stop losses accordingly. We got taken out a couple of times here. And in fact, during the New York session yesterday, we had a couple of stop losses hit here as it was not a very good yesterday for us, as we saw stop losses on the buy position. We also saw stop losses on the sell position. So it was more of a choppy scenario around this area during the New York session, which negated all possibilities of even making some profit off this market. However, price action did break out of the 15,820, which actually fall in line with our expectations from yesterday's trading session, as we saw price break out, retest the structure to inside this move, and as a result of this, we have a buy position running at this point in time. And for those of you who capitalize on that one, well done to you for being on standby to capitalize on this move. Now, at this point in time, I will be suggesting that maybe we should just move our stop losses right now to the entry point and secure this position so that the worst case scenario we will be seeing here is a break even. Now, the reason why I have said this is simply because of this choppy situation we have been noticing here, which further emphasize that this market is caught in a limbo right now, not knowing what to do next. Now, before we go further into the details here, I would love us to run through the higher time frame so that we can have a background knowledge of how we got to this point, and at the same time have a better perspective to what is going on in the market, as this will help us make a well-informed trading decision. So in that regard, we will be starting the analysis and refreshing our memories as to what is really going on the daily time frame. Now, on the daily time frame, remember that we emphasize how strong the buyers are in this market, as you will see that since the beginning of this year, price action had consistently found higher highs and higher lows, giving us an ascending trend line to work with. And not until 3 weeks ago, we saw price break down the ascending trend line for the first time, and we are now thinking maybe this breakdown was actually a false breakdown. As you will see, price later climbed back above that ascending trend line, bringing price back into a crucial juncture at the 15,000 930 area. And if you recall vividly how important I said this level is, as you will see here that the month of July price also has gotten into the structure, as we saw selling pressure resume as soon as price tested that area. And right now this week we can see price is also back at that zone, closing with a shooting star candle, revealing that price this market structure still have a lot of selling pressure around this area. So we had a crucial level to guide our trading decision for yesterday, where we were saying that if price will further break out of the structure, that we will be looking out for buying opportunities. However, we also mentioned that if buyers are finding it difficult to break out of the 15,930 and selling pressure persists here, we might likely be seeing a price drop, maybe to do a retest of the 15,300 level that was broken on Friday's trading session, maybe to incite an uptrend continuation, or in fact even breakdown to incite a sell-off. Now, if we zoom right into what has been going on here since the beginning of the week, or let's say since the shooting star candle was identified here, you will see that price action is currently trading within a range which emphasizes the indecision going on at this point. Now, with this information we've gathered here on the 4 hours time frame, let's see what is going on the 1 hour time frame. Maybe we are going to be seeing a downtrend move to retest the structure that was broken, or we might likely see a move that will break out the 15,930 for the first time this year. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. And remember, we already have a buy position triggered here, but look at what is going on here since the beginning of the week. Of course, you will see how the zone between the 15,870 level and the 15,770 area had been where price action has been, to further give us clues into the indecisive nature of this current market. Now, with the way things are going right now, I want to see price action break out of the 15,870 to feel comfortable adding more buy positions to my existing trade. As you will see that the 15,870 has been a major barrier for buyers in the since the second half of this week began, as you will see that at no point in time the price ever came close to that area. The recent one here is about a couple of hours ago, but that also closed in the form of a shooting star candle. So I want to see price take out that 15,870 to feel comfortable in a buy position, and if price continue to climb up, then a breakout of the 15,930 will welcome more buy positions here. So that is how we are going to be buying the US Tech 100 today. So let's see if the market will break out of the 15,870, after which we want to be having a buy position for today. Now, in as much as we're looking out for buying opportunities here, it is quite clear that buyers have been struggling in the last 48 hours, hereby giving us a situation where there is the need to consider sellers too as well. Now, if you would ask me, I would say here that for me to consider selling at all, I would want to see price take out that 15,770 level. As you will see, this zone here since Tuesday's trading session had played a major role in negating all attempt by the sellers to break through the structure. Now, if this persists, if this is broken down, that is, price takes out all the buy positions here, then at this point I will want to feel confident preparing a bearish opportunity. Now, to take advantage of that move, I want to see a breakdown of structure, retest to confirm, then we want to be part of a bearish move. Now, retest is very, very important, as we want to see price duly close below this level. As you will see, we saw some choppy situations around this area during the New York session yesterday, which actually shook out a lot of people who had thought that price will go to the downside. So at this point, before we can sell, we need a significant confirmation, breakdown of the 15,770, scale down to your lower time frame, let's say the 5, 10 or 15 minutes time frame, to look out for signs that buyers are finding it difficult to climb and stay above the 15,770, giving us beautiful opportunity to join a downtrend move. So that is how we are going to be managing our positions on the US Tech 100 for today. And as you will see, our center of focus today is basically between the 15,870 and the 15,770 area. So let's exercise patience and see at what direction the price action will break out of to give us clues of where price will be closing for this week. So these are my views here. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off, see if there are any questions before we move on to the next asset on our watch list. And you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. Rapso Mulenga from Zambia, good afternoon to you. Oh, good morning to you from here. It's morning from this part of the world, and trust you're doing very well. And I'm also glad to have you around with us this morning. Then I can see Miguel Reyes. I hope I pronounced that correctly. Good morning to you too. And okay, so I think that's all here. And in the absence of no other questions, I do want to assume that we are all on the same page. And in that regard, we'll move on to the next asset on our watch list for today. So the next asset on our watch list for today is the GBPUSD, popularly known as the cable market. And in fact, we've had a tremendously profitable week on this asset, as we were able to scoop in over 1,000 pips in profit on that buy position we took advantage of at the beginning of this week. Now, for the sake of clarity and for the sake of those who are not part of our earlier sessions, let's run through how the week really started for us and what led to the decisions we made. Now, at the beginning of the week for the GBP USD, it was more of an indecisive phase where price action was confined within the 1.22375 and the 1.22225 level, giving us an insight into the uncertainty in the market. And you know how we do it in this community. We either wait for the breakout or the breakdown of this range to give us a signal of where price is likely going. And you can see this range here. At no point in time did we see any attempt by the sellers to break through the support line. So this negated any idea of considering selling at all. But in this case scenario, we continue to see how buyers flocked around that resistance line at the 1.22375. And for those who missed out on the first breakout of that structure, the market was so kind enough, came back, retest the structure multiple times before that bullish momentum began. And remember that we also identified multiple levels ahead of the trading sessions. As we said, if price breaks out of them, we will be adding more buy position. So we had levels such as the 1.22535. We also added one more at the 1.22710. Then we also added one more here at the 1.22805. And finally on Wednesday, we also added one more, which gave us that huge engulfing bullish candle that took price into the 1.25050 area. So it was a tremendously profitable first half of the week for us in this community. Then fast forward to the midweek, we begin to notice how buyers were finding it difficult to break out of the 1.25050 level, hereby inciting the idea that we might likely be seeing some profit-taking activities. And of course, you know psychologically that for those who had bought at a very cheap price, it will get to some point that they will start considering selling, and this usually reflects on the chart as a retracement move. And something interesting also happened here, which further emphasized that we might be seeing some bearish momentum anytime soon, and that is the fact that we saw our price transitioned into what looked like a double top structure after buyers failed to break out of the previous high. And you know how we do it when we identify reversal setups like this. We mark out the neckline, which interestingly lines up with the psychological level at the 1.248, and all we just needed was price to break down that structure. And in fact, if you had missed out on that one, the market came back, retest the structure, and incited a 150 pips move after we added more positions to our existing trade. Remember, we added here, we also added at the breakdown of the 1.241 area to maximize that bearish move, and it was quite a very tremendously profitable day as well. Now, fast forward to yesterday's trading session, we begin to notice that despite the beginning of that retracement move, we saw how it became difficult for sellers to continue that momentum, as we saw how the 1.23800 level continued to negate all attempt by the sellers to break through that area. And this gave us a sign that we might likely be seeing the breakout of the descending trend line, which captured that retracement move. Now remember that we had connected a series of lower highs, giving us a trend line to guide our retracement move. And you know what we do whenever price breaks out of the trend line, it will give us an opportunity to negate the bearish momentum and get ready for uptrend situations. So to capitalize on that buy position, remember that we placed a buy stop order above the 1.241 area, which actually got triggered, and since then we saw another wave of bearish momentum happen in this particular market, most especially during the Asian session. And one thing I would like to say here is that the pound sterling, the bullish momentum that characterized the pound sterling at the beginning of the week may be limited due to the latest development as to majority beginning to weigh in the possibilities of a interest rate cut from the Bank of England by the beginning of next year, which doesn't make things look attractive for the pound sterling at this point in time. However, the weakened US dollar as a result of the data coming in from the United States may be helping the GBPUSD to raise some momentum here. Now, if we look at things from a technical standpoint, we can see here that price action had broken out of that descending trend line, which is a very good sign that we want to be preparing some buying opportunity. And interestingly, you saw how price came back to retest the structure that was broken. In fact, despite this bearish move following the reaction to the RSI data this morning, we saw price drop back, and as soon as it got into the trend line again, we saw an engulfing bullish candle spring up from that area. And for me, this is a sign that buyers still have a say in this market, as you will see how the 1.23800 area has become so formidable that sellers struggle to break through that zone. And as a result of this, I maintain a bullish bias and I continue to look out for patterns and structures as long as price remains above the 1.24100 area, and we look out for more opportunities to buy if price action continues to find new highs, breaking out of the 1.24580 and the 1.248, and of course the highest point that price got to for this week had the 1.25050 level. So this is how we are going to be managing a bullish opportunity on the GBP USD for today. Now, so you want to be marking out those levels to capitalize on that uptrend move. Now, in as much as we're looking out for buying opportunity here, which looks very, very reasonable considering the strong bullish momentum we witnessed at the beginning of the week, we cannot ignore the potentials of sellers too, as this retracement phase we saw started on Tuesday may not have ended yet, and it could still drop to the downside. And in fact, if we do want to be capitalizing on that one, how do we intend to manage that situation? Now, before we go into the details here, I want to show you something very, very interesting on the 4 hours time frame, which I think we can use to have a better perspective into this current market. Now, for those of us who have been part of these earlier sessions, you will be familiar with the structure we have on the 4 hours time frame, as it was the basis upon which we took advantage of that bullish momentum we saw here on Monday and Tuesday. Now, on the 4 hours time frame here, we had this ascending trend line marked out. That was the first structure we marked out here. Then the second one was the key level situated at the 1.2200 area, as we saw how price broke out of that structure finally a couple of weeks ago with an engulfing bullish candle. And during the previous week, we saw bearish momentum coming, which was considered to be a retracement move. And after using our Fibonacci retracement tool, we projected that if we see buy pressure around the zone, which lines up exactly with the ascending trend line, we shall be looking out for buying opportunity. And this was exactly what happened at the beginning of the week. We saw sharp rejections of this area. We positioned ourselves above the 1.223 and we rode that momentum all the way to the upside. Now look at what has been going on here since Wednesday's trading session. As soon as price tested that I had the 1.25050 level, we saw some bearish momentum come in with the hopes that we might be seeing some profit-taking activities to push price maybe back into this ascending trend line to inside the next bullish momentum, or probably not get that far, and then the emergence of buy pressure around this area could welcome buying opportunities. And if you remember what I told you here yesterday, I told you how important the 1.2400 level is. As you saw, this level was a selling niche at the beginning of last week before it was broken here this week. And since the breakout happened, you will see how sellers have struggled around this area. And in fact, in the last 6 hours, we saw this hammer candle from the 1.24 area, which further represent the fact that buyers are still very present here. And take a further look at this, you will see price appears to be gradually transitioning into what looks like a double bottom structure, where the breakout of the 1.24560 level will be welcoming more buying opportunities here. Now, in this case scenario here, we'll maintain a bullish bias unless price action breaks down and retest the 1.24 area. So the only condition for me to sell now is to see price breakdown. Retest for confirmation is needed here before jumping into a bearish move. But if price remains above the 1.24 area, we maintain a bullish bias here and continue to guide that momentum all the way to the upside. So I needed to show you what things are looking like on the 4 hours time frame so you can have a better understanding of what I am explaining right here on the 1 hour time frame. So on the 1 hour time frame, we hold on to a bullish bias here, and the only condition that will make us sell is for price to drop below the 1.238 retest of structure. Then we want to be joining a decline to the downside. So let's mark these levels out for today, as our center of focus is basically between the 1.241 and the 1.238 area, where price staying above the 1.241 will make us maintain our bullish bias in this market. And if price drops below the 1.238, then we begin to start considering selling the GBP USD. So that's my view on the GBP USD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I see your comment here, Soziel. Good morning to you, Soziel. Thanks for the compliment. You are very much welcome, and I'm very glad you found them useful. So, in the absence of no questions, I will take this as a confirmation that we can move on to the next asset. But if you still have questions, feel free to drop them in the comment section. I will be checking it from time to time. Now, with that being said, let's move on to the next asset. All right. The next asset on our watch list is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot as well, we've been doing very, very well since the beginning of the week. And if you remember vividly, we have been buying this asset. I think it's only on one occasion we had the privilege of selling, which never lasted long before another wave of bullish momentum began here. And for those of us who have been part of this profitable journey, well done and kudos to you for capitalizing on this move. Now, gold prices continues to maintain its upward trajectory for the fourth consecutive day, fueled by growing expectations of an extended Federal Reserve pause. This sentiment, reinforced by softer U.S. macro data, act as a strong tailwind for the safe haven assets such as gold, of course. Additionally, the anticipation of interest rate cuts has led to a decline in U.S. Treasury bond yield, which is currently undermining the U.S. dollar's strength. And in that regard, I will continue to maintain a bullish momentum as long as price action remains within the auspices of our bullish structure. Now, let's run through this from a technical standpoint. Let's see how the week began for all of us in this community. What are those things and rationale behind the decisions we made at the beginning of the week? Now, the first thing we saw on this chart right on the 1 hour time frame at the beginning of the week was the fact that price action was initially within a trend line, which was captured from last week Friday, as you will see here. Now, in addition to this trend line was the fact that price action fell into a range for the first 12 to 13 hours of this new week before we saw the breakout of that range happen, welcoming our first buy position for the week had the breakout of the $1,941-ish. And since that moment, we have been buying this asset. Remember, we also had our key level broken to the upside at the 1,945. We also added one more, had the 1,948. Then we went on to had again on Wednesday, had the breakout of the 1,959 at that point in time as we rode this momentum all the way up. So it was a very profitable first half of the week for us all in this community when we begin to notice some sell pressure resume as soon as price action tested that high at the 1,975 level. Now, the appearance of this situation here was that what we did on Wednesday was that we will look at how price will react to the zone. If price breaks down the 1,970, we might be seeing some retracement of the impulsive move, and if price breaks out of the 1,975, we look out for buying opportunities. And of course, we saw price break down the 1,970 level, giving us about 120 pips move before this buy pressure resume. Now, fast forward to yesterday's trading session, we begin to notice how sellers have been finding it difficult to break through the $1,957.50 level ever since price broke out of that structure on Tuesday. Now, on Wednesday, we saw that despite the impulsive bearish leg, it was difficult for sellers to break through. And during the early hours of yesterday, during the Asian session of yesterday as well, we saw another sharp rejection of that area. Now, this was a formidable barrier for us, as we named it a temporary demand zone, that as long as price remains above this level, we will continue to look out for patterns and structures that supports the idea of buying that asset. Now, coupled with the structure we identified here, we also noticed that price action was trading within an ascending channel. So after we connected the series of higher lows here, we had a support line of the ascending channel, and then we also connected the series of higher highs to give us the resistant line of that channel. And going into the New York session yesterday, we agreed that as long as price remains above or within the channel, we will feel comfortable in our buy position. And prior to the live session yesterday, I told you all that I already took advantage of the breakout of the 1964, and I did mention here that for those of us who missed out on this opportunity, let's wait and see if the market will come back, retest the structure to incite another wave of bullish momentum, which was exactly what happened. Price came back to retest the structure, and if you are taking advantage of that move, kudos to you for being on standby to capitalize on that one. And remember that we also marked out multiple levels we said we will be using to maximize the potential of that bullish move. So we had levels like the 1970, the 1975, and this morning I added one more, $1,982.50 level and the 1,988 area. So presently you should be having a minimum of 3 positions, because this 1,982 and 1,980 came up later during the New York session yesterday, and unfortunately we were not together, but at least we were able to mark out 3 levels: the 1,964, the 1,970 and the 1,975. And if you are taking advantage of this one, you should currently be having a minimum of 3 positions running in profit at this point in time. And if we look at the accumulative pips we have here, so for the first position you should be having a minimum of 270 pips. The second position here, you should be having a minimum of 210 pips, while the third position here you should be having a minimum of 160 pips. So presently you should be having a minimum or a total of 700 pips in profit at this point in time. And coupled with the over 800 pips we had at the beginning of the week, we are running with over 1,000 pips in profit on only the XAUUSD at this point. That is phenomenal, and congratulations to everyone who are taking advantage of that move. Now, going into the New York session today, what is going to be our plans? Well, first of all, you know how we do it in this community. As soon as price action moves significantly well in our favor, we want to be moving all our stop losses and protect our current position. And if we look at the current structure we have right now, I will be suggesting that anywhere between the 1,988 and the 1,983 areas seems most appropriate to move your stop losses to. Let's secure this position around this area, and while we are securing the position, remember that we want to be giving enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our next line of action? Well, this morning, while I was trying to dissect the current market structure in anticipation of new trading opportunities, I observed how price action was caught within this range during the Asian session, giving me something that looks more like an uptrend continuation pattern, as I saw price confined within the 1,988 and the $1,982.50 level. And of course, you know how we do it. Whenever we have a range like this, we exercise patience and wait for either the breakout of that resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. And in fact, we saw what happened a couple of hours ago. Price did break out, triggered another buy position for me, and for those of you who took advantage of that one, well done and kudos to you for capitalizing on that move. But if you had missed out on that one, well, let's see and remain patient if price will come back and retest the structure that was broken. So something like this is what we want to be looking out for next to be part of that uptrend continuation. Now, it's not all the time the price may retrace back into structure, and in fact it may continue to find new highs from this level going forward. Now, if that is going to be the case, let's mark out the highest point that price action has been for this week, which is exactly at the 1,993 level. So you do want to be marking that level out too as well. If price goes on to break out of this level, we will be adding more buy positions to our existing trade. So let's see how this is going to play out today. If price goes on to break out of that structure, we definitely want to be adding more buy positions to our trade on this one. So this is how we are going to be managing any buying opportunity in this current market. And one thing I also want to let you know here, to emphasize here, is the fact that price remains above the resistance line of that ascending channel we spotted earlier, which further buttresses the strength of the buyers here. So we'll continue to look out for more buying opportunities in this particular market at this juncture in time. Now, with the situation ongoing right now, I would like to say here that in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers too. Remember, today is the last trading day of the week, and there are chances that we could be seeing some profit-taking activity reflect on the chart. And if this happened, we could see some selling pressure come in, bringing price back to the downside. Now, look at the structure here. Remember, we have an ascending channel here. So if price action, okay, let me zoom this out a little bit. So you can see this, the ascending channel, higher highs, higher lows, higher highs, higher lows, higher highs. Right now, we could see a situation where price could come back down to the support line of that ascending channel, maybe to incite an uptrend move. Now, if this is going to be the case, maybe we are going to be seeing a short-term sell-off here, then we want to be looking at a breakdown, that is price drops back inside the channel, retest of the 1,988 and continue selling pressure here will give us an opportunity to join a bearish move. So this is more or less a counter trend opportunity. So we'll be looking at price coming back into the support line here, where depending on how price reacts to the support line of that channel will determine if we are going to be adding more sell position or getting ready to join an uptrend situation here. So these are my views here, but I doubt if price will drop that far. But if it drops, we want to be on standby to capitalize on that move. So these are my views here on the XAUUSD for today's trading session. So basically, our center of focus for today is between the 1,993 level and the 1,988 area, where depending on the direction of the breakout of the structure will be giving us an insight into where price is likely going to be closing for today's trading session. So that's my view here on the XAUUSD. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, after which we will be rounding up for today's trading session. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. all right. So I see your comments. Each Maril, good morning. Axoaka is asking buy or sell. I don't know which one you're talking about. Is it on the gold? I think I just explained that to you. And Orwell's here again. Warisada, good morning to you. All right. Okay, Chris 20, good morning to you too as well. So, in the absence of no questions, I want to assume that we are all on the same page here. And in fact, it has been a wonderful moment with you guys as I enjoy every single moment I had with you. Well, since the beginning of the week, we have been monitoring four major assets, which includes the US Tech 100, the US All Spot, the GBPUSD, and finally the XAUUSD, all of which we were able to make significant amount of profit throughout the course of the week. And once again, I want to congratulate every single one of you who are taking advantage of these trading opportunities. For those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I do encourage you to be part of the subsequent editions, as the more time you spend with us in this community, the better you will become in understanding our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing more of you on Monday morning as we come here again to have another fresh look at the market with the hopes of replicating what we did this week. So I wish you best of luck during the New York session today, and please remember that for every trade you are making, you want to be having a well-defined risk management strategy which is consistent with all the trades you take. Remember that every decision you make in the financial market is more or less an educated guess until price action hits your TP target. So on this note, I wish you the best of luck. Trade smart, trade consciously. Good evening, everyone. Bye bye.